Hi, this is Mr. Evans. This video is going to look at public limited companies as a form of ownership, and it follows on from the video on private limited companies. So we're right over here now on our kind of continuum of businesses, where we've got an incorporated business, a public limited company, a PLC. I've gone over what incorporation means and what limited and unlimited liability means in previous videos. So if you're unsure, have a look at that, because it's a core concept related to these public limited companies. But public limited companies are incorporated business, and this is the key thing about public limited companies, that their shares are traded publicly on the stock market. So when I'm remembering whether it's a PLC or an LTD, because private limited company and public limited company both have acronyms of PLC. Well, an LTD is a private limited company. It's limited. The owners are limited in where they can be. Whereas a public limited company, their shares are traded publicly, so anyone can become an owner. So it's a PLC. So what are the advantages of being a public limited company? Well, limited liability encourages people to invest in your company. Selling shares on the stock market, I know if I'm trading shares, if I'm buying shares on the stock market, okay, it's a risk, and it's riskier than, say, putting my money in the bank, where the bank will keep it safe for me. It's a risk to invest money in a business, because businesses can go bust, and if the business goes bust, I lose my money. But because I benefit from limited liability, I can't lose any more money than I've already invested. My personal assets are not going to be at risk. So if I invest a couple of £1,000 in a business, yes, that couple of £1,000 is at risk, but I'm not going to lose any more money than that if the business I invest in goes bankrupt, which is different for sole traders and partnerships, where there's no distinction in law between an individual's personal assets and the business, if they are that business owner. So because people are incentivized to put money into public limited companies, there's the opportunity to raise large amounts of capital through selling shares. It's called share capital, when a business gets people to invest money in them through selling shares on the stock market. We also get the prestige of being a PLC. So when we see companies with PLC after their name, there's a few here, okay, often it creates confidence in those companies, because PLCs, public limited companies, they have to adhere to a certain standard of law. There's certain things that they need to do. There's certain standards that they need to meet that are enforced by law, such as having the accounts audited by external people. In other words, people come in and check the business is recording its financial results properly, and therefore it creates a great degree of confidence in these businesses, because they have to be run properly, because there are legal requirements that they are, and they're checked up on every year. So that creates a prestige. Customers are happy to deal with PLCs. Banks are also happy to deal with PLCs and lend them money, because they know that they should be run reasonably well. But what are the cons of setting up a public limited company? Well, it can be time consuming and costly to set up. There are legal obligations that you need to adhere to if you're selling your shares publicly on the stock market, which adds to the cost of running the business. You need to publish financial data, and those accounts are extensively audited, which again is a cost. You need to ensure that the accounts are well managed, up to date, and then you need to pay for auditors to sign your accounts off and say, yes, this is a reasonable picture of the business's actual financial performance. So that can be costly and time consuming to do. Limited liability can encourage excessive risk taking. If the owners of the business know that they are not going to lose their personal assets, then maybe they will take actions in the course of the business that they wouldn't take otherwise. But probably most importantly for public limited companies, the decision-making power is diluted over many shareholders. So if a business needs to raise money, they often will do so by becoming a public limited company. Let's say they were a private limited company before, where they could control who was an owner of that business. Well, if I want to raise more money, then what I could do is I could sell shares publicly on the stock market. But that invites other people in, and part of selling shares is that people will get a share of the company, a say in how that company's run, and they get a share of the profits. So by inviting more people to become shareholders in my business, I am diluting my decision-making power that I had before. Okay, if I was running a private limited company before, a small group of us could make all the decisions. When we invite more people to join our company, that decision-making power is split over more people, and it becomes more difficult to run the business. The business is at risk of being taken over, and there's also the risk of short-term decisions being made by shareholders who want to maximize their dividend payments and not reinvest in the company. So these people who are buying into the company, they're buying shares, most of the time what they want is a share of their profits. They want what is called their dividend payment to be paid. And I'll do a separate video on shares just to clarify. But basically, many investors just simply want to make some profit, and that means that you're withdrawing profits from the business, giving it to shareholders as dividends, and the business actually has less money then to reinvest in itself. So, who are public limited companies? Well, generally public limited companies are quite big. Some of them you will have heard of, some of them you'll not. But the point is you can buy these shares in these companies on the stock market if you're over 18. And so that gives you a brief overview of what public limited companies are.